Hello, everybody, and welcome into Commodity Culture, where we break down commodities markets, sound money principles, and geopolitics, all with the goal of making you a better investor in the commodities sector. My name is Jesse Day. Today is March 11th, 2026, and I'm thrilled to welcome Ed Steer to the program, a precious metals expert who's been analyzing the space for over 20 years, a former contributor to Casey Research, and the founder of Ed Steer's Gold and Silver Digest. Ed breaks the latest on the price suppression happening in the silver market and why he thinks the shorts are fighting a losing battle that will result in a short covering rally of biblical proportions. Ed dives into the latest data from the COMEX, LBMA, and Shanghai Futures Exchange, including tremendous inventory drawdowns and deliveries in recent weeks, a picture that he ultimately believes will send silver soaring to levels most would find unimaginable. All of this and so much more ahead in my conversation with Ed Steer. Ed Steer, it is great to have you back on Commodity Culture. You recently released an edition of Ed Steer's Gold and Silver Digest where you reported on, quote, price management in everything, noting that gold, silver, platinum, and palladium are still being subjected to price manipulation today. Walk us through what you're seeing that indicates the metals are being managed and how deep this manipulation goes.
Okay, well, the management of the precious metals has been ongoing for the last 20 or the last 50 years. So what I was talking about in that price management and everything is when we had that big oil price spike up to $120 on Monday. And it was more than obvious when you looked at what was going on in the market, in all the markets, that the plunge protection team, or Ronald Reagan's president working group on financial markets that he came up with in 1987 after the market crash back then, which I remember very well. And they were in absolutely everything on Monday on Monday when that happened. They were in the dollar index, they were in the 10-year yields, the entire bond yields, the entire bond market, in stock markets, and obviously they were active in the oil markets because it traded in a $39 price range. And that didn't happen by pure market forces. There was somebody in there to make sure that it didn't blow and close above $100 a barrel. So the paper traders are still there, and they're still there in all markets, and they've shown no signs of going away. In my column every day, I comment on the big six commodities, which are the ones that they control the most. Those are the four precious metals, copper, and West Texas Intermediate. And they're active in all these markets, plus any other markets they want to get involved in, because, like I said, Ronald Reagan passed the President's Working Group on Financial Markets Act back in 1987 to prevent another stock market crash. And they've intervened in the markets, not only in the U.S. but abroad when they have to make sure that the stock markets stayed propped up. Because if they hadn't intervened on Monday, the stock markets would have absolutely cratered, and gold and silver would have been at the moon. And the three-digit silver price that, everybody's been talking about for the last several years, we'd be looking at a big three-digit silver price right now as we were talking, but that wasn't allowed to happen.
So what do you think needs to take place for that to be allowed to happen? Because the trajectory of precious metals continues to trend higher when we look at a longer term time frame. For instance, if we zoom out to a monthly time frame, we can see both gold and silver continuing to move almost in a parabolic fashion, reaching all-time highs on that monthly time frame, despite the best efforts of those trying to manage prices in the short term. So the scenario you described, are the shorts fighting an uphill battle at this point? And will there come a time when that game ends and we see what you described, a cratering of the broad market and precious metals going to the moon?
Oh, well, there's no question about it. I mean, this trajectory has been coming for a long, long time. Everybody's forecasted because of, the 6-year-long deficit in silver. And it's, the shorts, the big commercial shorts, the 8 largest traders that are the bullion banks, etc., they've been fighting a losing battle all the way up. And they're continuing to fight it, and it will last as long as they're prepared to fight this thing. There's only it will be allowed to close above $100 when they allow it to happen. Right now, that wasn't allowed to occur. So it is an uphill battle. It's a losing battle, And as silver analyst Ted Butler said 3 or 4 years ago, this is going to be a short covering rally for the ages when it is allowed to occur. And we of course saw that back at the end of January because if the powers that be hadn't stepped in. Like I said, for your first question, we'd be looking at a 3-digit silver price today, but it is a losing battle. And it's just a matter how long it is before they finally throw in the towel and let the free markets reign.
And how much damage has already been done to these short positions, considering how far and how fast silver in particular ran? Well, we've spoken a lot about the manipulation of the markets before on this show, and you mentioned that these people, these forces have very deep pockets, and so they're not necessarily bothered with the massive losses that could occur. What do you see causing that to shift, and maybe any more light you could shed on just the ample liquidity that these shorts have that allow them to kind of sustain these large losses but yet keep going?
Everybody that's short the market when the price is rising has to deal with margin calls, which go out daily every time the price rises by $1 or more. And so anybody who's short, who's let's say since last year at $27, when that's what the average price of silver at the beginning of the year. When silver spiked up to $100, I mean, you're looking at a margin call of $73 per ounce. And if you're short 10 million ounces, we're talking serious money here. So they have to come up with the margin call money plus the rollover cost from month to month. But the thing is, and as Ted Butler correctly pointed out, even they're still short that contract at $27. So if you've got 10 or 15 or 20,000 contracts holders that have been short silver since that day, they still have that short contract on. It's still there. And at some point, it has to be covered by the purchase of a long contract. And then they will have to right now it's just a paper loss they have on their books. At some point, it's going to become a realized loss where they're going to have to come in and buy the long contract. So, right now, the collective short positions of those short the market in silver right now, and silver and gold, is somewhere north of $70 billion. So those are unbooked margin call losses that they're going to have to cover sooner or later, and there's just no way out of it. That's just the way the COMEX futures market works.
Well, let's talk about that concentrated short position in the silver market and how it's progressing at present. Can you dive into the details there and how you see it all unfolding ahead?
I know I follow the Commitment of Traders report religiously, and I've been doing that for the last about 15 years or so. And it's the short position of the 8 largest traders in silver that matters, because those are the bullion banks and the large investment houses that have the deep pockets that can afford to short this market. But since last year, the short position in silver was, I'm just looking at last July the 8th of last year, the big 8 were short 84,500 silver contracts, which is a whole lot. It's like 420 million ounces. But as of last Friday, they were down to just under 46,000. So they've covered 38,000 contracts. Part of the reason the price has risen since last July to today is because these 8 large traders plus other traders have been covering their short position. So this rally that we've gone through with this parabolic price spike is partly short covering by the 8 large traders plus other traders, and also as the thing became parabolic, more and more speculators started to step into the market, and that's why it went parabolic. So the reason the price is rising is because of the short covering, and it's ongoing right now. So, right now we have the smallest short position of the big 8 traders in recorded history. It has never been this small, and I've got records going back to 2008. So there's the setup for a rally in the COMEX futures market, like I said in my column a couple of times in the last week, is incandescently white-hot bullish from a COMEX futures market perspective, because they have the smallest short position in history. And if you look at last week's bank participation report, which just shows you the short positions, of the world's banks. The five U.S. banks are short about 14,000 silver contracts, which is not very much compared to what they were short before. And they since last July, they've been in a desperate race to try to get out of their short positions. And so it's part of their short covering that's driven prices higher as well. You know, go back to 1975 or whenever they started managing the precious metals. It's been 50 years since we were off the gold exchange standard and 50 years since the price management scheme began. And they never gave any thought to it when this thing started back then, 50 years ago, to how they were going to get out of this thing at the end when they were forced to cover the short positions and let the free markets reign. And what we're seeing right now is them desperately trying to get out of the short positions as much as they can. And all these price machinations that we've seen since, silver spiked up to 120 and then it's been smacked down, then it rose again, it got smacked down, and of course it got beaten down again today and earlier last week. These are all part of what the big 8 commercial short players are trying to do to get as many short positions as possible. So this is a work in progress, but I can absolutely guarantee you they will never be able to get out of all their short positions. So, from a things look bad because you look at the price and say it's down, but if you look under the hood, the battle there by the largest traders to get out of the short positions is a work in progress. And like I said, the setup for a major rally in silver is the most bullish I've ever seen, and I've been following these markets now for 25 years.
The sponsor of today's episode is ARC Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. I'm pretty happy with the silver price today. I don't see it as that bad. We're in the mid 80s here, I think, putting things into perspective. But as you mentioned, this does not reflect true price discovery. You also noted that there's been a sudden spike in deliveries in March. Why don't you walk us through that and how that fits into this whole picture?
Yeah, well, as everybody knows, there's been a rush for physical metal now for the last 3 or 4 or 5 months, ever since October, since the LBMA blow up. And more and more people are taking their paper short positions saying, I want physical metal. And so they stand for delivery, and we've seen lots of that over the last 4 or 5 months. But what has happened in the last 48 hours starting yesterday is that in March, there were about 4,500 gold contracts added to the March delivery month yesterday. Okay, which is it's a lot. It's a lot of gold. And today, I'm just looking at the charts here. There have been 7 million ounces of silver traded in March. So a whole bunch of that will be standing for delivery tonight in tonight's daily delivery report. And I'm going to be really interested who the short issuers are on that one, who's being forced to cough up the silver. As the headline to my column said today, was Morgan Stanley yesterday had to cough up 1,700 plus contracts in gold, which is almost 6 tons. So the people that were long against us said, we don't want the paper short long positions anymore. We want the gold. So they ponied up the money and demanded delivery. So there was big deliveries in gold yesterday and huge deliveries in silver coming up today. And so the rush for physical metal is back on in earnest. Well, how high do you think we could go here? Because you've spoken before on this show about the silver price reaching unimaginable levels. That has seemed to be playing out, particularly as silver rose into the triple digits before coming back down to earth, of course, including a gut-wrenching 26% loss in a single day. We're now sitting in the mid-80s. Now, obviously, price predictions are very often a mug's game, but in terms of where you see silver going, do you expect us to hit new all-time highs perhaps this year? And how far do you think silver could rise in 2026? Well, I think I sort of answered that in the first question. If the boys, the commercial traders of whatever stripe, hadn't stepped into the market on the 27th of January, whatever day it was, when it blew through 120, it would have blown through 220 and 320 and 420 and 520 and pick your number. Okay, we would have seen this short covering rally of biblical proportion and what Ted Butler called the bonfire of the silver shorts, and we'd be looking at a fantastic three-digit silver price right now. So how high it can go, it will be entirely up to, as I said before, what the big four and big eight commercial shorts allow. But could we break up to new highs this year? Oh, absolutely. There's no question about it. I will be very, very surprised if we don't close out the year with a three-digit silver price of some size. And like I said, it's still up to the big four and the big eight. And it's, like I said, the setup in silver is white hot. And in gold, which I forgot to mention, it's not quite as bullish, but it's still on a historical level, it's still extremely bullish. So, the boys are basically sitting on the price until they're prepared to allow it to rise again, and that's why I'm very confident that we'll see a decent three-digit silver price before the year is done.
Well, with the war in Iran being very front and center at the moment, I'd be remiss not to ask your thoughts because it looks like it's going to be dragging on much longer than the Trump administration initially expected. Do you think, as this war continues to potentially evolve and expand, that it will have any noticeable impact on precious metals prices as that sort of safe haven demand aspect of the metals?
Well, it tried to do that when it spiked through 120, but the powers that be came along and said no chance of that. And like I said, look at crude oil; it went to what, $100 a barrel. I don't know what it spiked to, but they were in the markets killing that, and they killed the price of the other precious metals, and they ramped the dollar index and drove the bond yield, 10-year yield down, and propped up the stock markets. This is all. The war in Iran should make a difference. Right now the situation in the oil market is very fluid, and we've just had the price machinations of the last 3 or 4 days, but this is yet to play out because this war is not going to end anytime soon. There's been no agreement. I know that Trump was on the phone to Putin yesterday trying to get him to mediate this thing, but good luck with that. So this is going to go on, and what you're seeing now, and it's already started, is that Qatar is shut in their gas production, and a bunch of other the Gulf state countries are starting to shut down their oil field production because they don't have any more storage capacity. And this is rippling through the other Mideast countries as well. And Saudi Arabia will be the last one to fall. But once they shut in the oil fields, it's going to take forever. Okay, for a very long time to restart them up. It's not like just turning on the tap and away they go. The physics of oil drilling and oil pumping and extraction is so complicated that I don't even want to get into it. And I don't even understand it myself. But the thing is that the price shock that we're seeing right now is nothing to what we're going to be seeing 2 weeks, 3 weeks, 4 weeks, and months down the road here when this war finally comes to an end at some point. And then the problem becomes getting these fields back up to producing what they were before the shutdown. And that's going to take months and months. So the full effect of, higher oil prices, we have yet to see. And of course, at some point, hopefully it will have a price, positive impact on the precious metals. But like I said, the big four and big eight traders and the plunge protection team may have other ideas, but sooner or later, Mr. Market's going to take over. And one thing that we haven't talked about yet, which I'll just mention briefly, and everybody knows about, so I'm not going to dwell on it, is that we're in the 6th year of a supply-demand deficit in silver, and it hasn't gone away. It's not going to go away, and that brick wall is coming up. And I think that's one of the reasons why you're seeing this silver market, trying to spike higher in price, and all these people, rushing into buying as much silver as they can get their hands on, which has been going on for many months now.
Well, assuming that the oil price does continue to rise and get perhaps into those high triple digits as reality sets in, we see issues with the Strait of Hormuz, of course, very few ships able to transit safely through that area. We're seeing oil refineries get bombed. We're seeing panic. And obviously, the Trump administration, the last thing they want is incredibly high gasoline prices as they go into the midterms. But they might not necessarily be able to get a handle on that through market manipulation or other methods. So, assuming oil does continue to rise, what would that do to inflation, and what would the overall impact, do you think, would be on the global economy?
Well, inflation is baked in the cake. There's no way they're going to be able to hide this. And it's not just the transportation cost. I mean, you look at the price of the pumps. I looked at it yesterday. I said, "What?" Because it took a 40 cent or 25 cent a liter jump here in Canada at the pumps, and it's going to go much higher too. And it's not just in the cost of driving my car or driving the truck down the highway. It's the cost of producing all goods. Okay, whether it be growing food, processing food, manufacturing, whatever, it goes through the entire supply and production chain. And the most obvious one that we as consumers see is the price at the pump, but it affects the entire supply production cycle. And once it gets embedded in that, well, good luck getting it out. It's not going to come out tomorrow or next week or next month. It's a long-term process, and right now it's very dynamic, very fluid, but higher inflation is baked in the cake, and of course that's going to certainly affect the economies. And I just, they're keeping the stock markets propped up as best they can, but sooner or later, reality is going to set in, and we're going to see the economies, and not just in the U.S. but the entire world decline.
I want to talk about these so-called technical glitches that have been coming up at the CME COMEX recently, because first we had the server cooling issues supposedly at the end of November last year that halted trading for hours. Early February this year, another glitch briefly halted natural gas futures with a spillover to metals, including silver most recently. February 25th, there was a 90-minute halt in all metals and natural gas futures due to, quote, technical issues. How suspicious is all of this? And do you think the CME Group is complicit in using its platform to serve the interests of these big eight commercial traders trying to suppress metals prices?
When you see this stuff, of course, everybody gets their paranoid level up, including me. I'm not immune to this, by the way. I look, oh God, is what are they trying to do now? What are they trying to hide? I mean, but I got a bottle of pills here, and as soon as I get feeling like that, I take a blue pill, and then lay down until the feeling goes away. So, it's possible this is happening. But the fact of the matter is that, like I said, I follow the CO commitment traders report, the bank participation reports every week, and I'm looking at the numbers right down to the contract, and I've seen nothing in there, okay, that indicates there's any kind of hanky-panky going on. If there was, I'd be jumping up and down and hollering about it in my column, but I've seen nothing to that effect. The only thing I have noticed, and I will point it out because I didn't mention it before, and I'm just going to haul out this piece of paper I've got here. In the last 3 weeks, the short position of the big four traders has dropped by about 4,500 contracts. So you can see that they are aggressively covering their short positions. And I wouldn't be surprised that the price action that we saw yesterday and today is more of the same, trying to do the same thing. So, I'm suspicious of this stuff. Everybody's, the CME is basically a criminal organization. And as Ted Butler said, he says basically their entire purpose is to protect the shorts. They're not there to protect the longs. They're there to protect the shorts, especially the big four and the big eight traders. That's most of their business. So that's what they're there for. So, if the COMEX went the way of the dodo bird, I would be very, very happy to see that, and then prices would be allowed to trade freely without options and futures markets attached to it, and of course that would result immediately in three-digit silver price and true price discovery in all the commodities, which are far, far higher than they are today, and including crude oil. Even at crude oil at $80 a barrel is still pretty cheap when you look at it historically.
And what about the circuit breakers not triggering when silver plunged 26% in a single day? I've spoken to a couple of people, David Jensen, Andy Sheckman, both believe that that was certainly something suspicious, although other people have posted that actually, according to the rules of the COMEX, they didn't necessarily have to trigger on that particular day. As you said, people love to put their tinfoil hats on, and who can be helped in today's world with the Epstein files out there and all of this craziness going on? You almost have to default to the conspiracy theory first. But do you have any thoughts on what occurred that way and the lack of circuit breakers triggering as silver plunged?
You know, if you take a look at the entire United States administration, okay, the White House, Justice Department, this House, the Senate, it is as corrupt as you can possibly imagine. It is the most, I mean, it is just unbelievable. As a Canadian looking at what's going on in the U.S., from what it was, when I was a kid back in the 1950s and 1960s, it is metastasized into this absolutely grotesque and corrupt entity, you know, and Trump and his administration basically said we're not following international rules, we're not following any rules, we're going to go and do our own thing, and we don't care what you think, we're going to just do it. And obviously that's what they're doing. So this is just another example of that, where Terry Duffy over at the CME Group, who runs the show, he says, we're not going to put the 10% circuit breakers on. We know we're supposed to, but we're just not going to. So all the rules are out the window about what they can and can't do. So the rules be damned. So Jensen and whoever else, David, Andy Sheckman, thank you. They're absolutely correct. They should have kicked in, but they didn't. And I'm sure, without doubt, that was a deliberate move because they wanted the price to go down as much as possible to protect the shorts, the big short holders, which is what they're in business for. So it's like I said, everything is so crooked out there. You can't believe any of the prices you see today because they're all managed.
Yes, and I believe even internationally, international law has been completely thrown in the dustbin and seems to be nowhere in sight. No accountability for anybody doing anything anymore.
Well, look at what's going on. Iran, regardless of what your opinion of Iran is, Iran and the United States were in negotiations last June, and when those negotiations were ongoing, they bombed the hell out of it. Last month, they were in the middle of negotiations, and Israel and the United States attacked them there was absolutely no reason. They attacked them. It was completely a premeditated attack for no reason. Okay, which is the biggest war crime of all. So I mean, there's no rules anywhere. You could throw them out the window. I mean, they just don't exist. At home, abroad, domestically, it doesn't matter. I mean, the U.S. is doing bloody what it pleases, and they've become a rogue nation. Which, looking back at the end of World War II, I'm really sad about it. Not only for the good citizens of the U.S., but also for everybody else on planet Earth, because we're all suffering the consequences of it.
Absolutely. Post World War II, how many regime change operations has the U.S. initiated? 100, something insane like that. And I mean, the most harrowing reports perhaps coming out of the Iran conflict is the potential double tap strike on the girls' school. Now, a double tap strike is one of the most abhorrent war crimes you could imagine, where you attack a civilian target, wait for rescue crews and the families to come look for the deceased and try to rescue those who survived, and then attack again, killing all those people as well. And I don't know if we have 100% confirmation on that, but a lot of reports are circulating to that effect, targeting civilian infrastructure in general. It's a rough world out there right now, guys, and there's not really many good people to be found in terms of geopolitical actors, politicians, and the political elite. But let's get off of that for a moment here. I want to get your thoughts on the silver mining sector because interestingly, they have yet to provide any sort of levered play on the silver price. If we look at the SIL ETF as a proxy, it's barely outperforming silver itself over the course of a year, which is completely insane considering how much the price of silver has gone up. Why do you think this is, and do you think this disconnect has to correct itself at some point?
Okay, I've been pointing out in my newsletter starting about the middle of last year that there were times it looks like somebody was fooling around with the precious metal stocks. mostly the silver stocks. And I squawked about it 2 or 3 times last year, but then it really became obvious in October that the stocks were vastly underperforming silver and also underperforming the gold stocks as well. And it was only until somebody sent me a chart of SIL versus the silver price where the discontinuity became obvious. It was the middle of September where it was sort of tracking the silver stocks okay. Then all of a sudden it just cratered, okay? So somebody is actively managing the silver stocks right now, and they're also managing the gold stocks too, but not to the same extent. This has been going on now heavily since the middle of September. And will it correct itself? One would assume it would, but like I said, I mean, they're managing everything, and you can't believe anything you're seeing out there. In my opinion, the silver stocks, if you look at your portfolio, it should be worth about double what it is today. That's how bad the manipulation is. It's just grotesque. So, you have to look at, our stock portfolios, the oil price, the stock market, the dollar index, the treasury yields, the wars, the unprovoked war against Iran. All of this stuff is all part of the same thing, of a completely corrupted financial and monetary system.
Well, if we look at the gold miners, the story is somewhat different. The GDX ETF has doubled the performance of gold in that same time frame of 1 year. Perhaps still not what many speculators were anticipating. You mentioned you think that they could be manipulating the gold stocks as well, but to a lesser extent. Is that why they're performing while the silver miners lag? And what's your overall assessment of the gold mining sector at present?
They've only really stuck their nose into the gold stocks in the last 2 or 3 months. Okay, last year it wasn't a factor at all. Okay, but it's just recently where if you look at the Huey versus the gold price, or this SILJ or SILV, and you can just track it. You can see the silver is like up $2 or $3, and the silver stocks aren't doing anything. Okay, the gold sector is fine. I mean, they're making enormous profits. The silver miners are making enormous profits. Everybody's doing wonderfully well. And it's blue skies as far as I can see, not only now, but even greater blue skies in the future. And as far as these precious metal stocks, they'll be allowed to rise as much as they're allowed to rise. I mean, look at the silver price this morning. They're in the silver price this morning, the gold price this morning, and they're also in the. Why is anybody not surprised? They're managing the silver stocks and the gold stocks as well. And somebody asked me how they were doing this, and I don't think they're shorting the stocks, like going in and they could be doing that. But I follow the short positions pretty carefully, and I don't see anything like that happening. Although it could be going on, and I'm just not smart enough to see it. But what I see, what I know they're doing, I believe I know they're doing is like the big price decline on January 27th or what it was. Every time there's a monster engineered price decline, the stocks, of course, follow, and the people buying those stocks are not value investors. So they're the boys, the big 4 and 8 shorts. They buy up billions and billions of dollars worth of silver stocks. And then on days when the silver's taking off higher, they sell them into the market to cap the rally in the silver equities. I've seen that countless times, and that's when I started squawking about it in October and in November and December. So the markets, everything is working fine, except for the fact that the 8 large traders and the powers that be are in the markets to ensure that the current events, whether they be in Iran or whether they be in the dollar index or the stock markets, isn't reflected in the two precious metals that have been money for all of recorded history. It's a losing battle, but they're still fighting it hammer and tong all the way up.
Well, for those who are value investors and who have a long-term time horizon, could this, disconnect, particularly in the silver miners, but also the gold miners, be presenting an opportunity potentially for those who are willing to do the time and due diligence to find those companies that are perhaps best positioned as gold and silver continue to rise ahead?
I had one of my subscribers ask me that today, and I said, if you're looking for an entry point, this is as good as they get. I'm like most of my subscribers know, I'm all in. I've got a very, very large sum in the precious metals market, and I've been all in for 20 years, so my stock portfolio has done very well in the last year. But, there's a limit to how low they can beat the price. And with the everything washed out in the COMEX futures market, there's very limited downside in the precious metals. And if I was going to invest a dollar, if I have the money, but I just got so much in the market, I don't want to put any more in it. It's as simple as that. I've got a very, very handsome sum in the market, and I've got cash laying around I could put in there. And I said, God, how much money have I got in the market? I just think to myself, and like I said, I take one of those blue pills and lay down until the feeling of buying something goes away, because I just got enough in the markets already. But this is as good an entry point as you're ever going to see.
I'd love you to break down the latest information you have when it comes to inventory levels, transactions, and deliveries on the CME, COMEX, LBMA, and Shanghai Futures Exchange, and the picture they paint about the current state of gold and silver markets globally.
Well, I referred earlier to the number of contracts that are being traded in March in the last 2 days, where the paper short holders are rushing to buy physical silver and physical gold yesterday and silver today. Well, that on a macro level, when you look at everything going on, we had the problem in the LBMA back in October, which surprised the hell out of everybody, including me. And then, of course, in the COMEX so far this year, in January and February combined, there were 51 million ounces shipped out of the COMEX in January, another 51 million in February, and so far month to date in March, only 6 business days long, there's another 12 million shipped out. The ZKB Zürcher Bank in Europe, their biggest silver ETF, that's down big on the year. And you talk about things like the Shanghai Gold Exchange and the Shanghai Futures Exchange. I keep track of them religiously. I report on them every day. The inventory levels in silver on the Shanghai Gold Exchange and Shanghai Futures Exchange are at their lowest levels since the start of 2015. That's like 11 years ago now. I mean, they have virtually nothing left. I think between the two of them, they have about 18 million ounces in inventory. I remember when they had like 10 times that amount. It's down to absolutely fumes and vapors, and more silver came out of the Shanghai Futures Exchange today. And last week, 2.6 million ounces came out of the Shanghai Gold Exchange. 2.6 million ounces of silver came out of the Shanghai Gold Exchange. So the giant sucking sound of metal being drawn out of all the inventories and depositories in the world is absolutely enormous. And it's not just confined to the big boys. If you take a look at all the mutual funds and ETFs in silver over the last couple of months, it's the amount of silver just being sucked out of the system is just absolutely amazing to feed this deficit. I look every day. I look at these numbers and say, "My God, why is the price of silver in the 3-digit category right now?" And it should be, and it will be at some point. It was once the boys decided that time has come. So, all the signs are there. The setup in the COMEX futures market, the drawdowns of the inventory levels, the rush for physical metals in the COMEX futures market we've been witness to for the last 3 months, but especially in the last 2 days. The signs are all there. This whole thing is going to come crashing down. And we're going to get this what they call the great reset, which I'm not disagreeing with. And even if we don't get a great financial reset, we got to get a reset in the price of physical commodities, and that in and of itself will be a great reset, which they'll be talking about 1,000 years from now. So, the setup is all there. All the signs are good. All we have to do is wait for these paper hangers to decide that it's time to go.
Well, for those who want to dive deeper into all the topics we've discussed today, tell us about Ed Steer's Gold and Silver Digest.
Okay, I write a daily fact-based column on the internet 5 days a week, about 260 columns a year. And it's basically about almost all exclusively about the precious metals. And if you're interested, it costs US $100 a year. And if you're just go to my website, and I'm sure you'll post it in the description down below, and sign up if you feel what I have to say is worth the while.
I will put a link in the description below. I receive your newsletter. I cannot believe how cheap it is considering the amount of content that you put in there. Incredibly detailed, so much info. So I really recommend people do take a look at that. Ed, thank you so much for coming on the show. It's been a blast.
My pleasure.
Thank you for joining us today. Our sponsor, ARC Silver Gold. Osmium has some great prices on precious metals, bullion products. They are on your screen right now. These are subject to change and well supplies last. So reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you, and represent sound money in style with the exclusive Commodity Culture Stack Silver, not fiat t-shirt, available in the shop using the link in the description below. And I will see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.